Hey guys, welcome to this week's Finance and Five, where we take you through the latest in property and finance trends. So we're going through the state of the rental market, some specific city growth trends, and some lending trends and what they mean for your borrowing power.
Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home.
Simon, let's head off from the top. The CoreLogic Chart Housing Pack was released this month. The combined value of residential real estate hit $10.8 trillion. So what's it mean for the market and I guess for everyone out there?
Oh, I think the main thing here is that, property has always been a big part of building wealth in Australia. And the fact that we've now reached $10.8 trillion of residential real estate value just really goes to show how important it is for people to own a home and also as an investment class, what people really care about. Property is wealth here in Australia, and that's probably likely to continue in the long term. Probably also some increased pressure maybe on policymakers to address the affordability issues. We do want to make sure that, ideally, that our government is making sure that houses are affordable for all Australians and not just the elite few.
Yeah, and interestingly, in that pack, there was some surprising figures. There's a bit of a slowdown in rental growth in some of the major capital cities. So a welcome sign for people. So the rental growth slowed down from 10.6% to 8.6% in April. So, it's good news if you're trying to save while you're renting. It means you're hopefully going to have a bit of reprieve from some of those rental increases, and hopefully will follow on to mean there's going to be reduced activity for investors who've been trying to get into the market, chasing that yield, and could create opportunities for first home buyers if you're sort of waiting, especially for opportunities. If investors aren't getting the rental growth, it could mean they might sell and present an opportunity to get into the market.
Yeah, and interestingly, there's a particularly noticeable slowdown for unit rentals in Sydney, Melbourne, and Brisbane. There's a few reasons why this could be. It's possible that there is an oversupply. I think in Melbourne, certainly there has always been like a large supply of units. And Brisbane, not so much these days, but a few years back, if you remember, Jade, you looked around the Brisbane skyline and there was about 20 skyscrapers all building apartment blocks. And so maybe there's a bit of a hangover effect from that as well. Either way, this probably means there's a bit of an oversupply of units in these capital cities and could be related to the changing preferences. So ever since the pandemic, I think people have been looking for bigger living spaces, change the way they live with having a home office as well. And maybe these smaller units aren't as attractive to these people, which is a great opportunity if you are looking to buy. If you're looking to get your first home, then you could look at buying a smaller unit somewhere in a capital city and use that as a stepping stone to the next property after that.
Yeah, and another figure that was pretty interesting was the quarterly growth pace eased to 1.8% in the June quarter, down from 3.3% in June 2022. So I guess there's a couple of things here. Like, it could indicate there's a bit of cooling making easy pressure, but the fact is it's still growing. There's still growth there. Probably more bigger picture, it hopefully should regulate that growth rate because it's probably those higher portions in some of those markets where it's growing 15, 20, in Perth, predicted to grow to 30% over the next couple of years. There needs to be a bit of tempering there just to bit of catch up. So the estimated sales in June was still above slightly last year's figures, 8.6 above June last year. So definitely pretty robust market from the sales perspective. There's still increased competition on the available properties and still a lot of buyers out there, seeking to get in the market, and there's still no slowing down, definitely with the demand out there.
Yeah, well, let's take a look at some of these capital cities in more detail as well. So Perth, 6.4% increase in home values last quarter. Perth has always recently been one of the strongest performers, so not really surprising there. But the crazy part is a median selling time of 10 days. So properties are selling in a week and a half in Perth. This is a hot market. So if you are buying in Perth, you need to be prepared to move quickly. I'd say that there's probably a good chance of continued growth in these conditions. Price in Perth are going to continue to go up for sure.
Yeah, definitely that days on market is one of the biggest indicators. It's just showing the demand. If things getting snapped up quickly, there's more buyers than sellers, and it means the price is going to continue. So definitely keep an eye on that days on market or median selling time there. Melbourne next, there's a 0.6% decrease in home values. So potentially opportunities there for home buyers, could be the right time to get in now that it's starting to, values are slipping there, and could be a good way to get into long-term growth. Obviously, in these specific areas, you need to be careful of oversupply. There is a lot of construction sort of out west, and even the apartment in the city, there's been a bit of activity there. This temporary dip could present a bit of an opportunity there.
Finally, looking at Brisbane and Adelaide, both of these cities have had shorter selling times compared to last year. So again, we're looking at that median time on market. And this is probably a sign that, like as always, when you're looking at this, there's probably no surprises that this is the case of Brisbane and Adelaide are also being high performing. These markets are still fairly competitive. In contrast to, say, Sydney and Melbourne, I think, you are going to have a bit more competition if you're looking to buy in Brisbane, Adelaide and Perth for that matter. Just something to keep in mind is that your approach to where you're buying is very different. So if you're buying in a hot market, you've got to lead forward, with your best offer, like Jaden calls it, is elbows out strategy. You go in there with your elbows out to make sure that you get the best chance of securing a property that you're interested in. If you're in a slower market, there's a bit of a different approach. So if you're looking at, say, Sydney or Melbourne, you can potentially look to negotiate more, look to get better conditions on the contract and those sorts of things. So the type of market you're in is very important when you're buying. And so it's always worth keeping an eye on which way things are going in the city that you're buying in and even in the suburb that you're buying in as well.
Yeah. The other data point I found pretty interesting here was the total listings. So the total listings was 0.6% higher than last year, which is good news because more listings, more choice, to sort of send out across the different buyers, but it's still 17.3% below the 5-year average. So it looks like this persistent undersupply issue is going to continue, definitely in the short term, potentially going to continue to put price pressures on there in highly sought after areas. Like you said, Simon, in Perth, there's just more buyers than sellers at the moment. Moving on to our next segment now, lending trends. So there's a record high for the average new owner-occupied home loan. It was $626,000 nationally. So gone are the days when first home buyers buying for $300,000-$400,000, it's just not even realistic. Even $500,000 seems to be sort of long gone now. So yeah, interesting one here, Simon, to start the conversation. Like it means probably you may need to shift the way you're looking at your repayments. If you need to get in the market, like a lot of the people looking at the home guarantees, going to be the 5% deposit, but potentially these high prices are going to mean you're going to need to stretch your average loan size.
Yeah, and I guess that's, if you look at the fact that property is now at 10.6 trillion, the average home loan increasing to support that underlying cost of homes is not surprising, although it is a shocking figure. I mean, 626,000 as an average new home loan. That's big numbers. This is something to be careful of if you are buying, and especially in this kind of climate where the interest rates are likely to go down, but no one knows exactly when. If you are trying to buy a home and you're really stretching past what's comfortable for you, you just need to be a bit careful there. Sometimes it's a better case of looking to buy a place that isn't quite as perfect for you, but it's within your budget and won't cause you financial stress.
And the counter to that as well is like, it depends on your situation. Sort of seen people who you might know there's a pay rise coming through, you've got bonuses. You still want to be comfortable, obviously, but everyone's situation is different. Because like at that average loan size, $626,000 per, for the average loan, it's about $950 a week in repayment. So it'd be interesting to pull up maybe a couple of weeks, look at average rent and that sort of stuff. But it does depend on state too, because in New South Wales, it's the highest average loan size of $767,000, Queensland, $586,000, down to WA, $538,000. So WA and Queensland in particular are all-time highs. So we are seeing that. It does vary state to state. With the growth off the back of sort of WA, like you were saying, Simon, before, Adelaide, Queensland, it's meaning that higher loan sizes may be expecting. You need to sort of factor in, like you said, Simon, if there are interest rate increases, what that means for you in the future.
I mean, it's a good point you raised as well about, if you have bonuses coming in or other changes, say like a new graduate or like a recent graduate or example, and you know that you are going upwards in your career and you're likely that your pay and salary is going to increase over the next few years because you've got sort of that trajectory going on, then, you can afford to be a bit bolder with how much you initially spend. So likewise, if you potentially have an inheritance or any of these other things that kind of give you additional money from some source, then yeah, you can definitely be bolder. But if there's not going to, it all comes down to about what kind of changes are likely on the horizon with your finance, either like for more money or less money. Like if you are planning on having children, then you need to kind of sort of calculate how that's going to affect things as well. So always just think about your financial situation over the scope of the next few years when you're buying, so you can feel more comfortable about when you do buy.
Definitely. And the other interesting stat here was the share of new investment lending was up 37.1%. So it was the highest since May 2017. So surprising to see that back. We obviously, investors had a rough couple of years. There was a Royal Commission. There were some changes to lending guidelines with minimum deposit amounts for investment lending, but this is slowly easing up. So investor activity, I think, is going to be increased over the next while. So it's going to mean there's more competition for first home buyers and could indicate investors are getting more confident with future capital growth, rental yields. And I guess an extreme, like with the national election next year, keep an eye out for policy intervention. I think it's going to be a pretty big topic for the Australian election next year, the federal election. So wait and see what sort of transpires there.
Yeah, and on that note, Jaden, found this just the other day that 1 in 20 Melbourne homes are actually unoccupied. So it's almost 100,000 homes that are just sitting there vacant. And on the subject of investors, there's a good chance that a lot of these are owned by investors who are going for more that speculative investment practice. So they'll just buy it and hold it empty and just purely go for capital gains, which is not really what you want to see when there is a rental housing crisis across the country. Disturbing figures almost, like the vacancy rates in some of these areas are much higher than you would expect given where the rental market is at. Brunswick East is like 12.7%, the CBD 12.4%, South Melbourne 12.1%. So a lot of these are around the 10% vacancy rate of, properties just sitting there vacant with no one living in them. And it's not really what we want to see.
Yeah, I remember a property commentator a few years ago saying, and this was pretty anecdotal, but saying like, well, if you look at the skyline in some of these areas, on a weeknight or on a weekend, you can see almost the lights in some of these towers. It's mostly empty, or there were a lot of, this was an issue in Brisbane a couple of years ago with people, in particular overseas investors, buying residential property off the plan because it was allowed by FIRB, and just buying it to lock up for that gain. So I think it's something that needs to be addressed, because some of these empty houses, like you said, there's almost 100,000 houses, could theoretically house 250,000 people based on the average size. So that's pretty crazy considering there's 48,000 applicant or households on the Victorian social housing waitlist. So if the homes were rented, like the stock of rental stock in Melbourne could be increased by like 20%. That's more homes for people, potentially helping the affordability and the housing issue fundamentally.
Yeah. Luckily, the government is trying to do something about it. There is this Victorian vacant residential land tax, which is coming in 2025. 1% of capital improved value increasing by 1 percentage point each year that the property is vacant. So, that is a good idea. If you're going to buy a property and leave it empty for capital gain, then they're going to tax you on it. Hopefully that makes it less attractive and makes them think about other options for how they could use the property. So this applies to residential zoned land in metropolitan Melbourne that hasn't been developed for at least 5 years. And they're also looking for tip-offs. So if you're in Melbourne and you see a vacant property, then let them know about it, because they certainly want to know.
So next up, some new rental laws in Western Australia. So there's a couple of changes here. This has happened to a couple of states. There's been some minor tweaks with rental bidding we talked about a couple of weeks ago. What's the change here, Simon, and how's it going to impact renters or even first home buyers that might want to cancel their lease, in the short term?
So two big changes here. One of them is that tenants are allowed to have pets and make minor modifications. So you can't be denied a pet by a landlord unless they have their specific bylaws that they can show, or they can make a special appeal. But overall, if you have a pet, that shouldn't be a reason why you can't rent a property. And then you can also make modifications like, hanging pictures on the wall, just the basic stuff. The other big one is that rent increases are limited to once every 12 months. So even if you're on a 6 months rental lease, they're not going to be able to bump up that rent each 6 months. So good news all round. It makes renting more attractive, also makes it easier to save up. If you're not getting stung with those increases on rent every 6 months or whatever, then you've got more chance to save up your own deposit.
Good stuff there. It's all good and potentially could hopefully lead to a bit of a swing back for the owner-occupied, especially in WA, where stuff's selling in a matter of days, a couple of, under 2 weeks, which is insane. Simon, for our next segment, you got a couple of practical advice tips here. So what are you sort of thinking with this?
The big thing here is that if you're buying in a market that is where ours is, with huge property values and huge average loan sizes, being able to focus on building your larger deposit is really the best thing you can do. There's always a risk here because you can delay your entry into the market, which risk is further price increases. But until you reach that point where maybe you can be eligible for the home guarantee, or basically focusing on getting your deposit saved up as quickly as possible. It sounds like easy advice, right? But it's not. Yeah, and Jaden, I'm sure you've got something to say about it.
Mate, like I've got a counter on this because I had someone I helped in December. So like only 6 months ago, he bought a unit in Brisbane in Newstead for 500,000. It was just under 500, it was like 498 or something like that. Bought it, used his deposit, used the minimum deposit, had to pay lender's mortgage insurance because he didn't fit with the home guarantee scheme. But he was of the view that he'd missed out on a place 2-3 years ago before COVID. Prices almost doubled. He just wanted to get in the market to get in. Didn't mind his minimum deposit, didn't mind he paid LMI to get in the market. And with the view that that was going to become an investment property in the next sort of 3 to 5 years. Anyway, he hit me up earlier this week and said, oh, hey, there's been some sales in my building that are saying the properties are worth $600,000 now. I was like, oh, that seems a bit extreme. That's $100,000 in property growth in 6 months. Like the market hasn't gone up sort of 20%, but let's have a look at the valuation. Anyway, we got a couple of bank valuations and he was right. The bank valued it at $600,000 when he paid $500 6 months ago. So I think that the hard thing here too, and what's a bit of a balancing act, is he just never would be able to save up $100,000 in 6 months. So it's that balancing act where, like you said, you definitely need a deposit of some sort, unless you've got the help of a guarantor and your income situation is agreeable, you can potentially afford to make higher payments. But potentially you need to look at your own situation and say, well, do I want to wait? Will this property suit me for the next 5 years? Like if it's only going to suit you for a year, then you're paying a lot in lender's mortgage insurance and everything else, and you speculate on the property market growth. But if it can make sense, if you can get in, then potentially get in when you can afford it, when it suits your lifestyle.
Definitely valid points, Jaden. Absolutely. I think the other thing in terms of advice here is that whenever you're looking at buying, make sure you do have your finances sorted out before you start house hunting. It makes it a lot easier to get your loan approved and get a better borrowing capacity if make sure you've got a good credit score. Make sure that your debts are under control. If you have a lot of credit cards open, close them off and make sure that you're kind of in the best position to get finance. Because again, if you're looking to get enough to borrow for a larger loan value, you do everything to maximize that borrowing capacity. And make sure you get pre-approved as well.
Yeah. And everyone's situation is different. Like I sat down with a couple this week and we're going through the numbers and things like she'd just paid a big chunk of her HEX off. It was down to $14,000. Like, oh, this is really great. Like it's only 14, that's good. But that $14,000 HEX reduced their borrowing capacity by $70,000. So it was the difference between them buying a home for $550 to $620. So they said, well, that's, we've got the cash there for the HEX. Like, does it make sense? And then that's the other thing. Well, you might use some of your deposit to pay off that HEX. And that's where we can help. So as a mortgage broker at Hunter Galloway, we can give you a free assessment just to see what's going to make sense. You might not be looking to buy until next year, but at least you know what you need to do to get everything in the right order and ready to go. So I think there's a couple of things to think about there, but yeah, some good points overall. And we've got a couple of courses actually as well. So I'll include a link below to our community that's got some resources to work out if now is the right time to buy. Should I buy? Should I continue to rent? Not even from the financial perspective, but from the personal perspective and what that looks like. And the figures, the difference running the numbers if you own a home for 10 years and you pay that down, or you stay renting and potentially with rental increases and what that looks like. Simon, so I guess like wrapping it up there, take us back from the top. So we covered a couple of interesting trends there with the CoreLogic data. Like residential property seems to keep marching up, but what are the sort of keys that you sort of put up in that first section?
So I think the key thing here is just to be aware of what's happening in your local market. Perth and Brisbane and Adelaide, they're all continuing to grow quite rapidly. Sydney and Melbourne, not so much. So check out your local market conditions. We've even got a monthly update that we put out about the property market on the Hunter Galloway website as well. Anything like that to know what you're dealing with, and that gives you a chance to figure out how to approach buying in that market. That's probably the key thing there.
The other one, I guess, keep a lookout for any legislative changes. That property vacancy issue hopefully will get resolved in Melbourne, because that's a crazy amount of property, 100,000 that is sitting there that could be leased out and help with the cost of living there. And I'm sure it's a similar story in other states. And some new rental laws, which are really positive if you're obviously trying to save and worried about your rental kind of going up because of the shortage there. It's pretty good. That's it for today, guys. Like I said, check out our new community. I'll include a link below. There's Q&As there and some live sessions that we're going to be running as well, just to help with some of those questions, because it's just overwhelming, the home buying process. And it doesn't matter if you're in the saving stage, if you're currently searching, or if you own a home, you're trying to grow a portfolio, we can help you out there. Until next time, we'll see you guys later.